Okay.
Okay, it's recording now. Okay, you know, I'm gonna start with the basics, support and resistance. Okay.
Yes.
Okay, for my support and resistance, I don't try to guess. Like I know many traders just stare at the charts and then just draw lines. Okay, I'm not. I'm not gonna do that. I don't do it that way. Okay.
Yes.
'Cause I know most traders would be like, okay, this you can see price has been resisting this area and just draw a line there, then pull a line there. Okay, like this,
Yeah.
like this, like this, and like this. Okay, like I know this is how like a normal trader would
Yeah.
do it. Okay, but I don't do it this way.
Yeah.
Okay, I use Fibonacci retracements. Okay, so what I do
Okay.
is I just pick the highest and the lowest point. Okay, because I want to draw support and resistance of this area. Okay, I'm just gonna take the highest and the lowest point this side before the price action that I wanna draw. Okay.
Oh, okay.
Okay. So I can use this as my high and this as my low because you can see it covers the entire price action this side.
Yes.
Okay. So let me just remove. Okay, this is AUCAD daily chart. Okay, let me put in the week just so. Okay. Now we have our candles properly. So I said I'm
Yeah.
taking this point and that point. So you just pull your Fibonacci. It doesn't matter if you pull from top to bottom or bottom to top. You still get the same level. Okay. Can you now see
Or the
how
same results.
can you see how these levels like fit exactly where I drew those lines? Okay, you see
Yeah. Yeah. Yeah.
8.6, you have a line there. At 8.2, you also have a line. 50%, you have
Yes.
a line. 61.8, you also have a line. Then okay, 78.6 is a bit low, but you can just adjust slightly, just that it touches those lines. You saw how easily you do it. You don't have to guess.
Yeah.
You don't have to guess this thing.
So you just take the lowest point and the highest point, and then you give you the proper points.
Yeah, the one that covers the price action that you wanna spot. Because I chose this one and that one because I would have taken this one and this one. Eh? But the problem is that I can
Yes.
see this one is slightly lower than this one. Also, this one is lower than this one. It would work, but your lines wouldn't be as accurate. Okay, let me
Oh, okay.
see let me see if that will work. Okay.
And now this Fibonacci retracement is just a normal Fibonacci.
Yeah, it's normal.
Or they
I
oh,
think the only difference from MetaTrader is that we have 78.6 on TradingView, but
oh,
you can add that level.
okay.
Okay, I want to show you how it does it if you use a point that is higher than the current price action. Okay, if I pull it from there like this, it will give me the same point, almost the same point, but you can see they are slightly shifted. Like
Yeah.
this 38.2 is slightly lower. This 61.8. Okay, at least it is giving me an accurate 50%. You see this 50% is accurate. Let me change the color, maybe to blue. Okay. Okay, you see the
Yeah, I
50%
can
was,
see.
yeah, it was accurate, but the higher levels were slightly shifted. You can use this method in any time frame. It's still gonna give you what you need. Okay, let me remove everything
Oh, okay.
in today's time frame. But since we drew on the weekly time frame, you can just call those major support and resistance. So as you go lower, there'll be minor support and resistance. So those ones, you can say those ones are the strongest. Okay.
The ones on the weekly chart.
Yeah. Okay.
Okay.
So let's choose this one and this one. Okay, this point and that point, and see if it will give us our zones in this area. Okay, like this.
And you said most you can throw this from any direction.
Yeah, from any direction. You can see this 23.6. You see how nicely it's holding.
Yeah, yeah.
It's holding nicely right there. 38.2 is also holding nicely. 50% is also holding nicely. 61.8. Okay, it is holding because you can see price did reject in that area.
It was hitting that out.
Yeah, it made a fake breakout there and there. Okay, maybe if you see this level right there, it looks like a fake breakout, but I'll show you. Maybe it's a minor. Maybe there is a minor zone somewhere. There's a minor zone somewhere there. You see on a lower time frame. Okay, and then we have this 100%. Okay, now now that we have our support and resistance like that, I want to see if this level, maybe if we, okay, let's pretend we didn't have this price action, this one. Okay, so our highest point would have
Okay,
been,
nice. Sorry, can you repeat that? I think I didn't hear that properly.
oh, okay. Let's pretend we didn't have this price action. Okay, I want to see if
Yeah.
Fibonacci is gonna give us this level. Okay, so I'm gonna use this point and this point as my high and low. Okay, so if I draw it like
Okay.
this,
Yes.
if I draw it like this, you can see it was it was the 50% retracement of this motive wave. So you can see the 50% does cover this section there, like this area. Can you see?
Yes. Yes.
Okay. I think that's basically it on for the support and resistance. Okay, and one more thing is, I'm sure you've seen on my chart that I never have these support and resistance sitting there.
Yes.
Yeah.
Yes. I noticed.
So because the drawing method is so easy, I can draw them anytime when I need them. Okay. Like
Oh,
like
okay.
when I'm doing this current analysis, I don't have to like keep going back. I'm just gonna pull my Fibonacci like this, and then I continue whatever that I'm doing. Can you see how? Because I already have my lines, I don't have to redraw them.
Yes. Yes.
Can you see? Okay, what's nice about Fibonacci? You can even use Fibonacci expansion, even though you don't have any price action in this area, but you can use Fibonacci expansion to give you the same level. Okay, Fibonacci expansion has 3 points. So those 3 points
Yes.
are like this. You can see you're getting your other level. So you can expect price, if price breaks 0.618, it's gonna come to 78.6. Maybe it's gonna struggle there a bit. Maybe it's gonna push like this. Okay,
Yes.
100%.
Yes.
Usually after you break 100%, that's where you get that rally to 161.8.
Oh, okay. I see. I see.
Um, but this Fibonacci expansion is personal. I use Fibonacci expansion for my take profit levels. So this is TP1, TP2, TP3. And then I usually put in 4 entries and then I leave one to run for one. 161, 1618, because this level is very rare, like it's highly unlikely.
Yeah, that it goes there.
Yeah, the price is gonna come there. But once you're in a trade, you should give it a chance to come there. You can just trail your stop loss to break even and let it run.
Oh, okay.
Okay,
I see.
so
So like you would have. Oh, you said. Oh, yeah. Okay, no. Now I understand. Now you're still showing me the support and resistance. Okay.
yeah, okay. Oh, another thing is sizing that support and resistance, because I usually draw like rectangles like this. Like I want to show you
Yeah.
how I decide how big should the rectangle be. Okay. Okay. Right now I have my support and resistance like this, and let's say I want to draw my zone. Okay. Let's say I want to draw my zone right there. I use what they call order blocks. Like I take the highest solid candlestick. You see right now it was in an uptrend, this section. It was in an
Yes.
uptrend. And then the highest solid candlestick is this big, this candlestick right here.
The highest solid. That green one.
Yeah, this green one. If it was rallying up, I would choose the highest green one. Then if it's going down, I would choose um, a red one.
Oh. So I see that you take that. You also include the wicks, or is it just the body of the candle?
Just include the body.
Oh, okay.
Okay. So if I was to draw this one, take I'll take it like that. Can you see how nicely it fits in the on the future price
Yeah.
on the future price action?
Yes.
Okay. Even though I know my Fibonacci is telling me like the line is going there, but I'll still use my order block because it's fairly close to the zone.
Yeah. True.
Yeah. So this is just a guide to show you which areas you should focus on. Okay, maybe here I'll choose the last red. Okay, even though the last red has a very huge rejection, let's see how I'll draw it. Okay, maybe in this case I wasn't gonna use this one because this is telling me this should be like this. Okay, it's sitting nicely because it's covering all these rejection,
Yes. Yeah.
all these rejection. Okay, it looks fine. It looks fine actually. Because what this is telling me, it's telling me that this is a no trade area.
Oh.
This is a no trade
Yeah.
area because I want to catch these moves outside the zone because you don't want to be stuck in this consolidation for a long time. I enter short
Yeah.
if it gets outside the zone. I go long outside the zone, but inside the zone, it's gonna give you stress. It's a stressful trade.
Okay. Okay.
Okay, so I think we're done with the supports and resistance. And then when it comes to trend line trading, I'm not sure if you've read this Secrets Revealed book, Trend Line Trading.
No, I haven't.
You haven't? Oh, okay.
What's it called?
It's called Trend Line Trading Secrets Revealed. Let me check.
Trend line. Let me just write it down. Trend line.
I'll show it to you now.
Oh, okay.
Let me change this screen share.
Where it teaches you how to draw trend lines properly.
Yeah, yeah. It's the best book I've seen on how to draw trend.
Mm.
Okay, my laptop is acting up.
Okay, no problem. Can I ask you something while it's busy loading?
Yeah.
How did you manage to stay level-headed? I've never seen you post any profit.
Uh, the thing is, everyone's doing it.
Yeah.
Everyone's doing it, and I try to keep my page like different from the rest. It's what makes me different on Instagram.
Yeah. No, I noticed that you've never posted one picture of profits.
Nah, I used to when I was still starting out, but I realized, nah, let me keep my profits to myself. Because the moment I start posting profits, I'll be lying. Most of those traders are lying. Like no one makes constant profits.
True.
No one makes constant profits. Even myself, like I still take major losses. Just that
Yeah.
with me, I sometimes take losses with the correct analysis. Like my analysis is, I could say 80% accurate usually.
Mm.
But sometimes the trading psychology gets to you and
Yes.
end up not making it. It's this book that I'm talking about. You've never seen it.
Uh, no, I've never seen it before.
Okay, I think I'm gonna give it to you as homework for now. Like it's a really good book. But let me show you um practically how I do it, and then later you're gonna see it from the book.
Okay.
Okay. So, okay. So okay, this is a daily chart. Let's go to the month. Okay. Even though I don't really start drawing my trend line from the month, but for the sake of this course, let's do it. Okay.
Okay. No, thanks.
Um. Okay. As for someone who uses Elliott wave, our trend lines are different, but we'll get to that. We'll get to that. Okay. So that book is telling you you're gonna look at your highest points and your lowest points, and you basically just gonna join them. And then, as a rule, it's saying you shouldn't let your trend line cut through wicks like this. It shouldn't cut through wicks. It shouldn't cut through candles. Okay.
Oh, okay.
Um,
Yeah.
with some strategies, this thing works, but it's gonna give you a lot of pain if you wanna take a trade. Because like you can't say this would have been a good trade if you cut through candles. What if this one wants to do the same thing as that one? You see,
Yes.
that was gonna give you a lot of pain. Once you're in that trade, you're gonna panic. But if you know your trend line is like this, you are confident that if it touches, it should turn back. Okay, like
Yes. Yes.
you're betting on that. Okay, so okay, this is a useless trend line, but I'm gonna draw it anyway. Okay, like this. No
Okay.
matter how long the
Yeah.
wick is, you still should draw it like that. Okay. And then usually at the end, on the last touch, okay, from this side going this side, on the last touch, you join another trend line like this. Okay, this is your point A, your point B, and then it continues like that. Okay.
Oh.
Yeah.
Yes.
Um, and then usually when this is at the same level like this, I I avoid drawing the trend line because instead of drawing a trend line, that's where you would draw a zone. You see,
Yeah. Yeah.
so you don't need to force a trend line. Okay, okay.
Yeah.
For now, we're done with zones. Okay, now let's go to okay. What that book is gonna tell you, it's gonna tell you have have these in different colors, just so you can differentiate them. Okay. Let's do the
Yeah. You
monthly ones
different
in
or
red.
you differentiate them as per time frame.
Yeah. Okay. So the monthly ones are red. Let's do the weekly ones. Okay. Okay, and okay, so the weekly ones, I don't think this is gonna work. Remember I said using the last point. I think
Yes.
on the weekly you would have to start a new inner trend line like this. Let me make them orange.
Also, you're not connecting that one on top of where you started drawing the trend
This
line
one.
because it's not the last one. Yeah.
It is the last one. Okay, we could say it's the last one because you need to treat as much as this trend line is only touching the weeks, but you need to treat it as an area. Okay,
Yeah.
as an area. So you okay? Let me do this. Okay, so as much as you are looking at this red trend line, but you should give it room, like for price to breathe, like this in there.
Yeah.
In your mind, this is how big this trend line is in your mind.
Okay. I see.
Yeah, because you might get a fake out. So that fake out, it should be acceptable for you because you're still looking at that area, at this as an area.
Yeah.
Okay. The reason why I'm ignoring this trend line, this point, is because we need many touches as possible. Okay. So if I do it like
Yeah.
this, it means I'm ignoring this one. Okay, and I'm only getting
Yeah. I
this.
see. I
I'm
see.
only getting this one touch. I'm ignoring those two. You may draw it. You may draw this line, but I could say it's not that useful.
Yeah.
So at least here I'm getting almost 3 touches. Okay, I think on the weekly I'm only getting one line because you don't need to draw this trend line like its time has passed. It's not gonna help you with
Yeah.
anything. Okay, so let me move to the daily and see what we get. Okay, on the daily, I could say we're getting this point and this point, so we can join a line. Oops.
Line there.
Yeah.
Just quickly just grab this. Hello.
Okay.
And then you're gonna have to must change the colors on the
Yeah.
daily as well.
Yeah. So this one is orange and this one is yellow. If you can see.
Oh, they both looked orange.
Okay. I think this one is in a channel, but we'll have to confirm. Okay. Let's say it's in a channel.
Yeah.
This is in a channel like this. Okay, you don't need to draw a line there because price has passed. Okay, let's go to 4 hour. You see how nicely the channel looks on the 4 hour. Okay, on the
Yeah.
4 hour, you draw your trend line. You would draw it like this, but this one is also valid. Can you see? This
Yes.
one. But I think this one we would draw it on if we go to 1 hour. Okay, let me delete it for now. Okay, let me change the color of this to green. Okay. Okay, so this is what we have right now. Okay, and then let's go to 1 hour. 1 hour is my last time frame. Okay, so
Oh, you don't go below that.
nah. Only if you're looking for scalping trades. Okay, even that trend line I was talking about, it doesn't fit nicely on the 1 hour. I think these two lines are fine. These two are fine because I can see this one is forcing me to cut through this area just to make
Yeah.
yeah. So I'm just gonna ignore it. Okay. I think on the trend line, yeah, we're done with trend lines. So this is how you just keep narrowing your time frames until you get to the lowest point, until you can't draw any zone, any trend line, I mean. Okay, so
So like you as well, when you do your analysis, you normally put these trend lines
from the monthly, no.
Yeah.
Okay, for now we just I could say we're just collecting the elements of my strategy. Okay.
Yeah.
I need to teach you how to draw support and resistance zones the way I do. I need to teach you how to draw trend lines. Okay.
Yeah.
So I think for now these trend lines are good. Okay. I'm not gonna delete them because I wanna show you confluence on how these things work together. Okay, let me hide all these trend lines. Okay. Okay. Let me go back to the daily. All right. So I think I need a blank space to explain something. My favorite pattern is flags. Okay.
Flags.
Yeah. Price moves. Price moves in flags. Okay. It might be a bullish flag, bearish flag, but it flags. Okay. So what this basically means is the price will have an impulse. Okay, so it'll have an impulse, and then it's gonna have a corrective structure. It's gonna have a correction before it makes another impulse. Okay. But yeah, but you're gonna need to understand these types of corrections. That is where Elliott wave comes in. Okay. So okay, here's a strategy that works even though you don't understand Elliott wave. Even if you don't understand Elliott wave. Okay. Once you spot a strong move in the market, okay, I'm gonna say it's an impulse or a motive wave. Okay.
Yes.
Impulse or motive wave. And then you see price is starting to reverse. Okay. Once it starts to reverse, there is where you become interested in the support and resistance zones for that price.
Yes.
Because okay. You already have your lowest and your highest point. That means you can now draw your zones. Okay. So you have your price like this. Now you have your zones. All you need to find is the strongest zone in there. Like where will price continue with the up move? Because we're trading with the trend.
Yes.
You just need to find the strongest zones in there. Okay. So what I do is I pull my Fibonacci, and then I make a box between 38.2 and 61.8 like this. Okay, these are normally the strongest zones. Okay. Usually when price passes 78.6, it's usually a reversal. It's a straight reversal. It's no longer pushing in the direction of the trend. So I make this as, I'm gonna call this my buy zone. Call this my buy zone like this. That is where I'm gonna wait to take my buy trade. I won't buy outside, anywhere outside, because you might buy, you might get this and you're already in a buy trade. Okay, you're already in a buy trade. And you think it's going all the way up. Okay, maybe your stop loss will be there, only to find that price is still coming to me, because I'm a patient trader. still coming to me, but you bought too soon. Okay.
Yeah.
Let me pull this again. I want to show you. Okay, maybe you bought somewhere in this area. You bought in this area because you saw a resistance at 23.6. You saw a resistance there and you thought it was gonna hold, and it doesn't.
Yeah.
Okay, so I'll be waiting inside there to take my buy trade like this. So you can see the structure that I was talking about, this impulse correction impulse.
The flag.
Yeah.
Yeah.
You see now it has flagged like this. Okay. So in this, if you take a buy in this box, you get the best risk reward. Okay. We have our zones, and we said below 78.6 it's a reversal. So if I take a buy from there, I'm gonna put my stop at 78.6, just so I don't get taken out unnecessarily. Okay, so I have my trade like this. I have my trade like this. Okay, you see the risk reward is still good. It's 3.28, and my minimum risk reward is 2.5. So if it's less than 2.5, it's usually not worth my time.
So how do you know the risk reward? You say you always put it at 78.6. So you normally just determine whether TPs or you use that expansion. What did you say, the expansion? Yeah.
Okay, this TP.
Yeah.
Okay.
The one that you want.
Okay, I was still coming there. Okay. The basic rules of a bullish flag or a bearish flag is that after you get a correction, the length of this leg will be the same length as this leg.
Oh, okay.
Usually. So what the Fibonacci expansion is telling you, it's telling you if you measure this from there and then you come back to your buy zone like this. Okay. This is your 100%. So what you're saying is that it should, it should come up to there. What this one means, it means 100% expansion of this. It means this length is exactly the same as this.
Okay.
Because it's sitting there at 1. Okay. You remember I told you my TP1 is 0.618, 0.78, 0.6, 0.1, and then 0.1618. So you can see I'll be taking partial profits as it's going to my target. Okay, so it's my TP1. Okay, TP1 there. No, TP1 is here. TP2, TP3. TP3 like this. Okay, then you can remove. Then you can remove your tool. You see, this is how I keep my charts looking very clean. Because you just pull your Fibonacci, you measure those levels you need, and then you remove it. Okay, and then there's a trick of getting an early entry, because you wouldn't know if price is gonna reverse for sure in there. Okay, there is where I use there is where I look for a trend line breakout, because okay, all my entries are based on breakouts. Okay, let me do this.
Why is it? Is it because it's safer or what?
It's pure confirmation. Like, I'm not sure how else I would confirm that the price is continuing in that direction unless it gives me a breakout. Since I'm not using any indicator, my confirmation would be a breakout. Okay, let me get my charger. My laptop is dying.
Okay, no problem.
Okay, I'm back. So one way that I get an early entry. A traditional trader would take their entry from here. You see, when we get that breakout, because this is the trend line
Yeah,
that we are looking for. You see your risk reward, like it gets really bad. So you see this breakout, and
yeah.
then only then you want to go long. Your risk reward is like 1.5. So for me to get a good risk reward, let me copy some price action there. Okay. For me to get a good risk reward, I'm gonna, okay, let me put this, okay, I copied a really bad structure. Let me get something else.
Yeah, I've never used TradingView before. I didn't know it was this cool.
Yeah, it's the most flexible analyzing platform you'll find. Like I wouldn't be able to do this on all this on MetaTrade. Okay.
Yeah.
For me to get an early entry, I'll just draw a trend line, an inner trend line in the structure. Okay. Say, oops. Okay, I wanted to make this trend line. Okay, let's say these blue trend lines are from 4 hour, and then this pink one is from 1 hour. So I'm gonna take my trade if I get a breakout from there, from in there. Can you see?
Yes.
Yeah. So my first entry will be right there, and then this will just be my second entry. This one. This will just be my second entry. So I can take 2 trades in one setup. So if it breaks the inner trend line, I take a buy. If it breaks the outer trend line, I take another buy. But the stop loss for this one will be different. I'll put my stop loss inside the corrective structure. Inside the corrective.
Oh.
The reason why, in case I'm wrong, this one is gonna end up maybe $5. This one will be in a profit of $5. So I end up not taking any loss. Okay. Usually, the stop loss for this one will be at the entry point of this one.
Oh, okay.
Yeah, so this is how I'll have my trade. But I have a document that I'm gonna send to you. Not sure where I put it. This laptop has been on for days. That's why it's acting up like this.
Oh, that's why it's like glitching.
Yeah, like I haven't restarted or shut it down or anything. Maybe 1.2. Okay, I created this document as a guide for my members in the premium group, but I'm gonna send it to you. You see, this is showing you what I just shown you now. That you take it, your first entry there, your second entry there, and how you put in your target. So basically, I'm basically showing you the types of corrections and how you can enter them. Okay.
Oh, I see.
Yeah. But I'm gonna send this to you.
Okay, no, thank you.
Okay. Oh, I was still showing you this. Let me delete this. Okay. Let me now show you the types of corrections. My course is actually very short. I think I was explaining too much.
Oh, no, it's fine. I'm really getting to understand it.
Yeah.
This is also a lot of new information. So I'm glad that you're also recording so that I can at least watch it over again,
Okay.
and just to absorb most of the other stuff that you were saying.
Yeah. Okay. Let me not redraw these structures because it can take a very long time to redo them. Let me just go to the book that I'm gonna send to you and 10 Elliot's Wave, AJ Frost. Have you seen this AJ Frost book?
No, I haven't seen it.
Yeah. You should send me the books you've been reading. I think you've been reading the wrong books. If you haven't seen the books I'm showing you.
Yeah, I saw baby perps there. I've checked stuff out on baby perps.
Yeah.
But because I didn't really like reading much. I only
Yeah.
like watch a lot of videos.
Oh, okay, I see. Okay, this is a really good book. Okay, this one is a zigzag. It's the structure that I made an example with because you can see in an uptrend you're gonna have okay okay, in an uptrend you're gonna have something like this. Oh, this thing doesn't want to draw. Okay, there you go. Okay, in an uptrend you're gonna have something like this. Okay.
Yeah.
You have your impulse and then you have your ABC correction. But for now, let's not worry about this labeling. We're gonna cover this labeling when we come to Elliott wave. Okay.
Okay.
Okay. So this is just a breakdown of this same wave. Okay, and then it's a zigzag, same zigzag but for a downtrend. Then we have a flat correction. Okay, it's like ABC like this. Also the same uptrend. Okay, you have this motive wave. After it corrects like this, it pushes up. Okay, the trick with this one is that the strategy that I shown you won't work on a flat correction. Let me show you why. Okay. Okay, if you have a flat, okay, let's say you have your impulse like this, and then you start to get a flat correction. Ooh. Okay, you start to get a flat correction like this. Then you're expecting to get this move. Okay. The problem with the flat correction is that it never comes to 61.8, 38.2 and 61.8. You saw that buy zone that I drew.
Yes.
Okay. Oh, my laptop is getting worse. Okay. Usually it's gonna bounce maybe around that 38.2. So your zone would be there. Your zone would be there, and price sometimes would not get inside the zone. But the entry method is the same. You just look at maybe you can enter there. Okay, price is gonna consolidate. You're gonna draw a trend line. If it breaks out, you go long. You see, if it comes back,
Yeah.
it should take you out on break even, and then you try again. You try again there. You draw another trend line. And then if it breaks out, you go long. Like you're gonna keep retrying until it takes you for this long run. You go in,
Yeah.
break even, and then you go in again. Okay. Let's go back to the book. Okay. There are a few variations of this flat correction. Okay. You have the regular flat where your point B is at the same level as the beginning of wave A. Then wave C is the same as wave A, same level.
Okay.
Okay, it's a regular flat. And then you have an expanding flat. You can see why it's called an expanding flat. Because, okay, from your impulse, you see price, it's starting to expand like this before it takes off. This one is usually tricky because okay, let's say price is gonna consolidate like this, and then you take a buy. You'll see this leg expanding higher than the motive wave, and then you think you have the long run, and then it takes you out. But this one will work with the Fibonacci because your buy zone will most likely be like this, and then you can take the breakout of this one. You see, you can get an early entry after being taken out of this one. Okay, still expanding flats. Okay, this one is a running flat. This one is usually tricky for myself and most traders.
The running flat one.
Yeah, the running flats, because you can see price is correcting in the direction of the trend. In the direction of the trend. For traders who trade like the normal patterns, they will say this is a double top. I'm not sure how you call this a double top, and then expect a reversal, and then you get killed by this coming move. So a flat correction. A flat correction is usually mistaken for this double top, because you can see double top or double bottom. You can see this this one, the regular flat. The regular flat, okay, it gives you this move, and then it retraces like this, and then it comes back. You can see already it's a complete double top.
Yes.
See, and then exactly where traders will be taking their short is exactly where price is gonna make this rally.
Sure. You know, I see.
Yeah. Okay, so it's why I always advise trading with the trend, even if it's a double top. If the trend is going up, you don't say you cannot guarantee that it's a reversal. You'd rather take this as a double bottom. Can you see? you trust this
Yes.
double bottom more than you can trust this double top. Trade with the trend.
Yes. Yes.
Okay. Okay. I think we're done with flat corrections, and then there are like 8, 9 variations of. Okay, there are 10 variations of triangles. Okay, but
Okay.
you're still gonna see them in this book.
Yeah.
You
In
trade
the book. Okay.
you trade them almost the same way, as long as there are 3 touches. Okay, some videos on YouTube will tell you if a triangle has 3 touches, it means it's red. What they basically telling you is that they're telling you about a 5-wave move.
Oh. Okay.
I think it's the Astro Forex guys. They're telling you a triangle once it has 3 touches on either side. Okay, like 1 touch there. Okay, 1 there, 2, 2, 3. On the 3rd touch, that's where they wanna go long. Because you see now you have 1, 2, 3, 1, 2, 3. But as Elliott wave traders will say, impulse move, you say this is A, this is B, C, D, and then at E, there is where we go long.
Wow.
Yeah, but without having to count the wave, once it has touched the trend line 3 times, the 3rd time is where you should look for opportunity. Because what I would do, let me use a different color. When price is making this wave, that is where I'll draw a trend line. Okay, so once that trend
The
line
inner
breaks,
trend.
yeah, the inner trend line. Once the inner trend line breaks, that is where I'll be looking to go long.
Okay. I see.
Okay. But I also have it in this document, like this. Okay, the thing is with triangles, they usually contract like really. Okay, let me try and draw. Okay, like when they're making their last wave, you find that like it's too
Yes.
narrow. It's too narrow for you to draw anything. So the best entry sometimes would be the breakouts of the main trend line, because it can get like
Oh.
really, really, really narrow. But if it's forming in a high time frame, you can catch an entry there, and then maybe another entry there, a second entry.
Okay.
Okay. Yeah, that is basically the types of correction. And then the tricky part is that sometimes these corrections can form a combination. Okay, it can form a combination. You can maybe get an impulse and then you get a flat correction like this. While you're waiting for
Yes.
that flat correction, you see price is not moving as fast as it should. Okay, the moment you
Yes.
don't see momentum after a corrective structure, it usually means there's another structure that is coming. They can combine like this.
Yeah, I remember. I think I remember seeing something like this on USD CAD.
Yeah. So price can combine corrective structures like this. So and then only to go up.
Mm.
Okay, I think the second structure is just to test patience of other traders. Maybe you went long, from there. So they're just checking if you can hold for this entire time. Okay. So in terms of labeling, I think I should just get to it. Okay. In terms of labeling
Okay.
something like this, you have a flat correction and then you have a triangle. So a flat correction is gonna have, okay, this is, let me use a different pen. Okay, this is 0, A, B, C. Okay, you're done. You're
Yes.
done with your flat correction, and then for your triangle, okay, the trend is still up. Okay, you're considering this as your impulse. You pretend it's draining there. Okay. So you're gonna say 0 from there. 0 is at the same level. Then you have your
Yes.
A, B, C, D, and E, like this. And then at E you end. You just
Okay, I see.
you'll just be following the same rules. You enter at C, the trade fails. You wait for E, and then it goes up.
Wow.
Yeah.
I see.
Sometimes price may okay. Okay, you have your fake momentum there. Okay, this is now becoming a bad example. Okay, let me remove the triangle. I'll tell you why. Okay, you had your flat correction, and then wrong color. After a flat correction, you get a zigzag like this. Okay, after the zigzag, price still doesn't move. Okay, and then it starts to form a triangle like this. Okay, so you
Yes.
have
Yes.
a zigzag like this. So your zigzag is A, B, C. Okay, and then your triangle is A, B, C, D, and E. And then only then you get your impulse. So the way you label this, you use I'm sure you've seen a labeling that is WXY or
Yes.
WXZ. Okay.
Yes. Yes.
What that means is, okay, after this impulse, you join this as one correction. Okay. You take this as
Yes.
one line. And then you take this fake momentum as another line. And then you take the entire zigzag as one line. Okay. You take the fake momentum as another line like this. You just strike through. You're striking through the correction. Once you've identified the correction, you just strike through. So what's gonna happen? This orange line is now W. This another orange line is X. This orange line is WX. It's now Y. The orange line
Yes.
is X again. Orange line is Z. That is where you get the WXYXZ correction. It means there are three corrections inside there.
Okay, I see.
Yeah, but if you have a double correction, like say you don't have that triangle, okay, like this, it only becomes WXY. It only becomes WXY like this.
Okay, I see.
Okay, I think I've covered almost all corrections.
Yeah.
Okay, even the combinations, and then we can just go through the rules for motive wave, for the motive wave.
Can I just drink some water? I'm a bit thirsty.
Okay.
Yes, I'm back.
Okay. Let me change the degree. Do you understand these degrees? Okay.
No.
Okay. The wave degrees are like what we did with the trend lines, the time frames, and the colors. They are just
Oh,
there.
okay.
They are just there, like to show you from which time frame that wave count is from. Okay, maybe from the month, because you'll see the only thing that's changing is the numbering. Okay, you see now it's big numbers with circles.
Yeah.
Now it's in brackets like that, because some traders they start counting their waves from the monthly up until their entry time frame, maybe up to 1 hour. So you need to know where the numbers are from. So you just keep changing.
Oh.
You just keep changing the formats. But for me, what I usually do, I just change colors.
You keep one numbering in just the colors.
Yeah, like if I do remember to change the degree, I change it, but it's not really very important. Okay. So we have a 5-wave move like this. The rule for we don't have a rule for wave 1 because there is where like everything starts. So we have a rule for wave 2. For wave 2, it says wave 2 should not retrace more than 80% of wave 1. Okay.
Yes.
So when you pull your Fibonacci like this, it shouldn't go more than 80%. So there is like 78.6, like it's really close to 80%. There is where I got the rule. You remember I said I put my stop loss below 78.6, just slightly below 78.6. It's because it's most likely that you'll be trading a wave 2 at any point in time. You'll be trading a wave 2. So if it's a wave 2, you'll only confirm if it doesn't hit that 78.6.
Yes.
Okay. And then we go to wave 3. Wave 3 is usually the longest. Okay, so some traders say it should be long. It's usually the longest, but it should not be the shortest. Okay, let me just say it should not be the shortest. It should not be the shortest, but it's usually the longest.
Okay.
Okay, it's usually the longest. Okay, you saw that that 1.618 that I was talking about, this expansion. Okay, if you pull it from there to there like this, you see this 1618. It's just there for a case if you're lucky and catch a wave 3, you'll hit this 1618.
Oh.
If you're trading a wave 3. But this 61.8, 78.6, and 1, it's usually a case that you're catching a wave 5 or something. Because a wave 3, it's acceptable for a wave 3 to be there. Okay, it's acceptable because it still meets this rule. It's not the shortest because it's at 100% of wave 1. It's the same length as wave 1, so it's not shorter than wave 1.
Yeah.
So it means from 100%, anywhere in between there, you can have your wave 3. It's usually nice if it hits there. And then for wave 4, a rule for wave 4 is that wave 4 should not retrace below wave 1.
Okay.
It should not retrace below wave 1. So what I usually do after you spot a wave 1, you just draw a zone there. Okay.
Yes.
You just draw a zone, and then anything below there is your invalidation point. Okay, let's say you want to take a buy. Let's say you want to take a buy somewhere there. Okay. And you already know it's a wave 4. So your stop loss needs to be below wave 1.
Okay.
And in that point in time, you'll know that the wave has been invalidated. It's no longer going to wave 5. As soon as it goes below wave 1, it's no longer going to wave 5. That's what it means. Okay, so you can have your trade like this. All the way to wave 5. Okay.
Yes.
Okay, and then for wave 5, there's no real rule for wave 5, but wave 5 is usually the same length as wave 1.
Okay.
It's usually the same length as wave 1. Okay. So yeah, that's basically what you have.
Okay, I see.
Okay, this is for the motive wave. But as you zoom in the degrees, okay. Let me just move these. Okay, let me say this is a minor wave. Okay. It means when I go to a higher time frame, I can just strike through like that. Do you understand this? What I'm trying to say? I'm trying to say wave 1 is composed by 5 waves.
Yes, I see that.
So on a higher degree, okay. On a higher degree, it's gonna be like this. Okay, 3, 4, 5. Okay, let me delete this. Okay, let me change. Okay, you see this one is minor. This one would be intermediate. Okay, let me even change the color. Make it blue. Something visible. Okay, so it's like this. So wave 1, since it's a motive wave, it's gonna have a structure like that. Then wave 2 is a corrective wave. So it's most likely it's gonna take any of those corrective structures that we've discussed. It can take a zigzag, it can take a flat, it can take a triangle, anything.
Yes.
And then wave 3 is a motive wave, so it's gonna have 5 waves. Then wave 4 is a corrective wave, so it can take any corrective structure. Then wave 5 is gonna have 5 waves. Okay.
And you said wave 5 is normally the length of wave 1.
Of wave 1, yeah. It can extend, but it's usually the length. Okay, so this is what you get. On a scale of 1 to 5, how interested are you in Elliott wave? Because I know it can complicate the trading process.
I'm interested on a level of 6.
Of 6.
A level of 6. Yeah, because like, I used to attend a lot of classes and I would see that trading, major support, major resistance, but I never really understood why would one place levels a certain area. It's only with Elliott waves that when I
Yeah.
started like watching videos, I could see there's some sort of structure in the
Yeah.
market. That's
Okay.
when my eyes began to open, and I was like, "Oh, I need to make sure I learn this one."
Okay. Uh, okay. This is a bad pair to learn Elliott wave because I can see the structures here are complex. Okay. Let's see. Let's see what we can do though.
Is this your favorite pay?
No, no. I just opened this thing randomly.
Oh, okay.
I'm not even sure which pair to choose. Let's see USD CAD. Because these are not my original charts. I just opened this. Okay,
Yeah.
I use Firefox when I'm having a lesson, just so I don't mess up my original charts. So this is
Okay.
another Trading View account.
Okay.
Okay. Okay. I'm just gonna start maybe here in this area. Okay. Let's say we need to start a count. Okay. Let me show you. Today I'm only teaching the easy ways because there's no point in using the hard way. Okay, I'm not sure if you were already in the Telegram group when I sent a picture of two indicators.
No, no. Which I saw you had a Telegram group,
Yeah.
but I went in, I went out because I saw
Oh,
that
okay.
a lot of people were posting their own things.
Okay. Um, there's this indicator called a zigzag. What this zigzag does, it takes the highest and the lowest points and it draws a structure like this. I always recommend this zigzag when you're starting out on Elliott wave because it like filters out the noise of the market.
Yeah.
Okay, can you see? Like you're now ignoring all this noise. You're just focusing on this line because now it almost
Yeah.
looks like the textbook Elliott wave because you can see now what you're having is okay. I want to try and draw a 5-wave move. Okay, we can first attempt and call this a 5-wave move. Can you see? Okay, let me hide
Yes.
the. The problem would be the rules. Okay. Let's measure and see if wave 3 is longer than wave 1. Okay, we said wave 1 is starting from. Okay, I'm using the wrong tool. I need Fibonacci expansion. Okay, from there to there and coming there. Okay, luckily wave 3 is longer than wave 1. So this wave 3 is valid. You can see it's higher than this.
The 100. Yeah.
Yeah. So it's a valid wave 3. So this 5-wave move is done. We're done. We've counted this. Okay. We pulled out the 5-wave structure because we can see this thing is impulsive. This thing is impulsive.
Yes.
It's not as slow as this one. Okay. So, and then after this 5-wave move, what I'm spotting is this corrective structure, this first one. Can you see it? this APC.
Yes. Yes.
Okay, so after that 5-wave move, you have an APC like this. Let me make it orange. Okay. Okay, this is an intermediate degree. Okay, this is also an intermediate degree. Okay, so we have this 5-wave move and then this corrective structure. But can you see we're not getting momentum, like to
Yes.
show that we're starting this corrective structure. So what I'm thinking is that we are like getting a WXY move, because you can see from there we have a complete flat correction like this. Okay, so I'm just gonna
Yes.
call it W, and I think for now we're getting a X and a Y. Okay, so this whole thing is now a W. It's a W, and now we're getting
Yes.
now we have a X like this. I'm thinking we need a Y before we can go up. Okay, so this is like the long-term analysis for USD CAD.
Yes. Yes.
Okay, so in the group we have a sell signal that is coming from there. Can you see we've broken out? Okay, let me make this orange. It's yellow, I mean. You see we've broken out of this corrective structure. Okay, let me clean up. Okay, I think okay, this is the weekly time frame.
Weekly time frame.
Yeah. Okay, I think now that we have numbers, we can hide, or we can hide this zigzag. Okay. So you remember when we started, I said, as Elliott wave traders, our trend lines are a bit different. We draw them where we need them.
Yes.
So you see this corrective structure. You see how I drew my line. Like they are enough like this. I don't have to pull them any further. I'm just showing the structure, and it's done.
Yes.
Okay. And then coming this side, okay, let me make this yellow, because I use yellow trend lines when I analyze. Okay, coming this side, we need to show wave X, how wave X is going. Okay, so this is our wave X, and it's done. Like you don't have to complicate it with any more trend lines. Okay.
Yes.
If you like, you can go deeper in these degrees. Okay, if you feel like you need the inner count. Okay, we can go to the daily and count some more. Okay.
Or to confirm the inner count.
Yeah. Okay. So we can take this as our impulse move. Okay. Not really. We can take this whole thing as our impulse move. Okay. Now we are correcting this move. Okay. So we need to start and say, okay, let me put back the zigzag. Okay. Since we're counting the inner move, you see our zigzag is ignoring all this, ignoring this move. So we can just change the period of the indicators, because indicators you need to adjust them a bit. Okay, you see now it's showing me it's going even deeper in the structure.
Yes.
Okay, so you can do this A, B, C like this, unless the price is showing a triangle. You're always gonna pull your APC. It's a APC,
Yes.
and it's ending there. Okay, this means this is X. Okay.
Yes.
Because after APC, you cannot just have another APC. you just you ignore the move. Okay, this is the move we are ignoring. Okay, our APC is starting there. You see, this is now looking like a running flat.
Yes.
Okay, so we can hide our zigzag. So what we have now is let me use this. So what we have now is a zigzag. No, it's a flat followed by another. Okay, this is a zigzag. This looks like a zigzag, but this is just a joint. This is just a
Oh, I see.
yeah. So
I see the
now,
3 moves.
yeah. Okay, so now, okay, let me clean this. So now, after this APC, it looks like the count is done because I think we need another WXY, but for this inner structure. Okay, that WXY,
Okay.
because this WXY, the big one, it's for the other impulse. Okay, but for this one,
Yes.
it needs to go like this: WX, and then the Y comes there. But let me change the degree. Make it green. Then it's a minor. Okay, let me make it a minute degree, just so it looks different from that one.
Yes.
Okay, so the inner structure is done. Okay, so you can see
Yes.
I did post this cell. You see this cell from there, this one.
Yes. Yes.
Yeah, me and my group, we did get this cell. I think I have a screenshot somewhere on my Instagram.
Oh, that's a nice. That was a nice sell.
Yeah, because you see, I have 3 letters in one level. So this
Yes.
is like a triple confirmation that this channel needs to turn from there because the corrective move is done. From this
Yes.
level, it
Yes.
was done. It was done. It's been done. Like if you have an appetite to hold a trade, you can hold. But I think I gave up somewhere there because it was collecting too much swap.
Oh.
Yeah. Okay. But from there, it's been done. Now it's going. It's going down all the way to this point.
Oh, I see. Talking about swap, I see you use JP markets. Is there swap too much or what?
It's too much. I'm only using JP markets for Nasdaq because
Oh.
I'm day trading Nasdaq. I don't put in swing trades. That thing
Okay.
is really expensive to trade.
Okay.
Yeah.
So which broker do you use?
I use IC markets.
IC markets.
Yeah, like their spread is really good.
Oh yeah, I heard you mentioning what do you call a group where you shared analysis.
Yeah.
Will I also be able to be added to that group?
Yeah, you're already in that group. I added you today.
Serious?
I added you today. Not the main group with like 1,000 people.
Oh,
There's
which group is it?
another.
Is it on WhatsApp or what?
It's on Telegram.
Telegram. Let me check. Oh, I didn't know. I have not
No.
opened the Telegram. Okay, no, I see. I see. I see.
Yeah. So that is where I constantly like share my analysis.
Okay.
Okay, I think on the Elliott wave side we are done. But you remember that impulse correction, that is how you take an entry on Elliott's wave. Okay, because it's not just about taking those counts. Okay, let me show you
Yes.
a practical trade. Let's say we want to take, this is our impulse. Okay, we've spotted an
Yes.
impulse move. And then what we do is we pull this Fibonacci like this. Okay.
Yes.
Because the price is now starting to correct. Okay, and then from there, we make this buy box. Okay.
Yes.
Make this buy box. Then we can now delete our Fibonacci. Okay. The reason why I can see the reason why price spiked below, it's because it had a gap. Okay. Otherwise,
Yes.
it was gonna make a 10 inside there. Okay, for this impulse. Yeah. But our buy trade was gonna be, okay, let me go to the 4-hour because we were gonna take it from 4-hour or 1 hour. Okay, so our buy trade would have been something like this. We're gonna draw a trend line. This is our inner trend line. You see it?
Yeah.
Yeah. Okay. In most cases, it comes in blue. Okay, this is our inner trend line. Okay, maybe we would have taken, okay, our first entry would have been this one. Okay, we take our entry, we get stopped out, and then we get a cheaper buy. Okay, we buy from there.
Yes.
And then you remember I said our stop loss is below 78.6.
Yes.
So this would have been a good trade because you can see we enter there, our stop is okay, very far from there, but our target is, okay, I'm gonna show you my targets using the Fibonacci expansion. Okay, so our target is like this, 1, 2, and then at the moment our 0.3 was there because we didn't have this one. Okay, it was like this. It was like this. So you see, we went out from my take profit 2. We didn't get to take profit 3, but at least TP2 was hit. TP2 was hit. This Fibonacci expansion. Like
so you held the trade that long?
No, I didn't hold it. I'm just showing you like a trade scenario, a practical
scenario.
Yeah. Okay. I didn't hold this long. I don't really hold my trades this long. What happens is that I get this long-term analysis, and then in between this long-term, I enter exit, enter exit, enter exit. But what I do is that since I know this is a buy trade, from here it's a buy trade, I won't be interested in any sells in between.
Yes.
I'll only be looking for buys only because I know like the long-term trade is a buy.
Yes.
Okay. So this sell was confirmed by the TP2, and another thing is that we can see that we almost touching this trend line. We are almost touching this trend line, so we are expecting that reversal. The trade was taken from a trend line. I think it was from 1 hour or 4 hours. I think it was from 1 hour. It was the trend line there. Okay,
Yeah.
I didn't force it from all the way down there because you can see it's cutting the price. Just from there, it's enough. It's enough. As soon as it breaks, you can go short, then hold.
Yes.
Yeah. Okay. On AUDCAD, I had something I wanted to show you, but I ended up not doing it. Because you remember, I had my trend lines. I had my trend lines hidden like this. But now that you understand the Elliott wave and the entry and exit strategy, I don't think this is gonna be, it's gonna matter much. Okay, we have our trend lines like this, and we want to, I wanted to show you confluence with your support and resistance. Okay, so you have your zones like this. Okay, let me go back to 4-hour. Okay, you have your zones like this.
Yes.
Okay, this would have been a good shot. You know why? Because you can see you had a zone. Okay, you had a zone there like this. That's going exactly. Okay, I'm using this last right candlestick.
Yes.
Let me delete the zones. Okay. And then your entry method would have been an inner trend line like this. Can you see? You connecting these points.
Yes. Yes.
Okay, let me make it blue because my entry trend lines, I make them blue. Because you see you have a zone there, and it has there's a higher time frame trend line that is going there. So you're expecting
Yes.
that trend line to block the price from going out like this. Okay. Another thing, you have a zone. You have a zone that you expect to be respected. As you can see, this is like a breakout and a retest. So you're expecting price to go down. Okay.
Yes.
Even though it did make this fake out, but you do have this trend line to block that price action. Okay, so you can see all the analysis is telling you to sell. Like, don't look for a buy. Don't look for a buy. Even these candlesticks are showing a rejection. You can see they are showing rejection. So as soon as you break this, okay, even broke and retested, this would have been a good odds. Okay, you can short. Maybe you can short from that retest and have your stop loss outside the zone, and then this target you can use that target as, because this is a zigzag. Can you see that?
Yes.
It's a zigzag. Okay, so it's a zigzag like this. So from there from somewhere down there we're looking to go up. So
yes.
This. Yeah. So this is like how good your trade would have been. And then in terms of copying the structure, because from there, saying we didn't have this move as yet, I was gonna do this. I was just gonna copy this structure and paste it there. Can you see? You copy that and paste it there, because with your zigzag, this move you're expecting is usually the same move as this one. Okay, and then you can have your okay, let me draw the zones like this.
So you try to look for as much confluence as possible.
Yeah. Okay, maybe I was gonna take my profits at this current level. I wouldn't like try and hold below this level, because this is a strong level, like it's the previous low. So this would be a good take profit level. So it's like, I think that's all you need to know. You can see now you're trading like a Kingsman agent. If you know all those things, you can see this looks like all the charts that I've been posting.
Yes. Yes, no, I'm beginning to see now.
Yeah. Unless you have questions or you want me to show you something on my side, It's done.
Oh, okay. Okay. No, I see. Okay, no, I think I'm gonna try and um, analyze and try and practice and see.
Okay.
You said Musi, you post your analysis there.
Yes. Every day.
Also,
Every day I post something.
oh, okay. So I can basically then analyze on my own and then try and use yours as a reference to see if
Yeah.
I got to the same place or not.
Yeah.
Oh, okay.
Okay. Let me go on WhatsApp. I wanted to comment on one of your analysis. Let's see. Um, but I think after this session, a lot is gonna make sense. Your Euro USD analysis. Let's check Euro USD.
Let me just open my WhatsApp.
Okay, that trade has failed already. Okay, has it? Okay. Well, let me copy your numbering. You said you numbered like this. Two, then you said 3, 4, and
Yeah.
5. So we're assuming wave 5 is truncated. You understand the term truncation, right?
No.
When okay. Okay, we say it's truncated if wave 5 fails to break the high of wave 3, because you see wave 5 is lower than wave 3.
Yeah.
Can you see? They have it here on the book. I'll show you. Where is truncation? Okay, it should be at the top. Okay, here it is. You see that scenario? It's right there.
Yeah.
Okay. So according to your numbering there, wave 5 is truncated. Okay, here's another trick. But I'm still gonna send a video to the group because
Okay.
some members requested a video. Sometimes I record videos and just send it there as an explanation. Okay, there is another shortcut. I showed you the zigzag, right? Let's see if the zigzag is gonna
Yes.
hold. It's gonna hold with this one. Okay, I need to pull it down a bit. Okay, it's not really seeing anything in this structure, but let me put in okay, it's called Elliott wave something. Elliott wave oscillate. It's basically the MACD. It's a MACD.
Oh, okay.
It's a MACD. So okay, your count is fine. Your count is fine, but I want to show you something. You see, when you put in the MACD or this Elliott wave oscillate,
Yes.
you see where it's red, where this is red, it means it's a corrective structure, which is correct. Wave 2 is a corrective structure. Okay, you see where it's green.
Yes.
Wave 1 is an impulse move. So that's another
Yes.
confirmation. You see, this is also green and it's a big green, which means this whole thing is wave 3. Okay, that is fine. You see now it's red, and you never got a red anyway there. You never got a red.
Yeah.
So this qualifies as wave 4.
That right there.
Yeah, this red, it qualifies as wave 4. So right now, and I saw most people are taking this buy. I couldn't catch it. Okay, So right now we're going for wave 5. Only now we're going for wave 5. It's the reason why this thing was looking complicated. Because that truncation, it's possible, but it's not always there. Because you can see
this is yeah. This is
um
the double top thing you spoke about that. Never try and say
yeah,
that that is a double top.
yeah. Okay. So um this is fair. Okay. Remember I said the rules wave 4 shouldn't retrace more than wave 1. That doesn't mean it should
Yes.
sit exactly, but it should at least be in the same zone.
Yes.
Okay, so most rules are still met in this case.
Yes, I see. Yo, that was a very nice. That was a very nice buy.
Yeah.
Yo.
So like if you had this indicator with you, you would have bought while it was still red. Okay.
Yeah.
Because you've seen since the beginning of the course, I haven't spoken about candlestick patterns. I don't look at that thing. I don't even pause. I don't really check
Oh, okay.
candlestick patterns.
Yes.
Because the problem with candlestick patterns, they differ with different brokers. If you're using a South African broker, you'll find something else. If you're using a Eastern broker, you'll find something else. Because the closing times
Yes.
are not
Yeah.
the same. Their 4-hour close is not the same as our 4-hour close.
Yeah. True. Okay. No, I see.
Yeah.
I understand. Yeah. No, I'll just practice
Yeah.
more, and then I'll use this video as also as a reference. I
Okay.
think you've covered quite a lot of a lot of things. Oh yeah. You said you're gonna send me the.
The books.
I think is it 2 books, ne? Yeah.
It's 3 books now.
Oh, it's 3 books.
Yeah,
Okay.
it's 3. Okay. Um, yeah, we're done, man. We're done. It was a great session. I usually cover this thing in 4 days.
Oh, no, thank you so much. I really appreciate it. I'm starting to like really see the light now.
Okay, man. All right. Good luck. And then
Uh, wait, this video you said are you gonna send it in the Telegram group?
no, I'm just gonna send it to you.
Or are you gonna send it?
Okay, I'm gonna upload it on Google Drive and give you the
Oh,
link. You stream it there or download it when you get time.
okay,
All right.
okay, okay. No problem. Thank you. Okay, thank you.
All right.